Hello everyone. Namaskar. This is Dr. Murlidhar Dunam. In this video, I am going to explain you about elements of cost and cost sheet in detailed manner. Right. First, I would like to tell you what are the topics I am going to cover in this video. Right. First, I am going to tell you the classification of cost, controllable cost, concept of cost, analysis of cost, elements of cost, and preparation of cost sheet. Right. First and foremost, what do you mean by the cost? Cost means the amount of expenditure incurred on a given thing. So, for example, if X purchased a chair for 500 rupees, so the amount of expenditure incurred on a particular thing, that is a chair, is 500 rupees. Why manufactured chair by paying 150 rupees for timber, 50 rupees for rent, and 150 rupees for color and other things for carpenter. So, from the above two examples, it is a clear cut that the cost doesn't mean the same thing under all circumstances. In other words, a flexible concept which can't be exactly defined. So it depends on the nature of the business and the industry and the context on which it is used. Basically, the cost is nothing but the amount of expenditure incurred on a given thing. Now, let me put focus on classification of cost. See how we can classify the cost. First, let me tell you classification means. Classification is the process of grouping cost according to their common features. There are various bases of classifying cost. Some important classification are given below. Right, first and foremost, here the by nature or element and classification on the base of functions, classification relation to the cost center, classification on the base of variability or behavior, controllability, normality, inventory, time, and classification on the base of managerial decision making. One by one, let me tell you. First and thing is a classification of cost by nature of element. So here, material cost, again, material cost will be categorized either direct and indirect. So, labor costs, direct and indirect. Expenses will also be direct and indirect. So, the main observations will be here. We need to observe for understanding direct material plus direct labor plus direct expenses is equal to the prime cost. See, this will be useful while preparing the cost sheet. Then, indirect material, indirect labor, and indirect expenses are also called overheads. So, all direct material, direct labor, and direct expenses will be included in the prime cost, whereas overheads, indirect material, indirect labor, and indirect expenses are called altogether is called overheads. Then, so this is the way we need to tackle material direct, indirect, labor direct, indirect, expense direct, indirect. All direct will be coming under the prime cost, indirect will be coming under the overheads. Now, what is the material cost? See, the term material refers to the commodity supplied to an undertaking. All materials which becomes an integral part of the finished product and which can be conveniently assigned to the specific physical units is known as the direct material. For costing purposes, materials may be classified into direct and indirect. Right. Let me tell you the direct material. So, here how we can classify as a direct material. If you manufacturing any product, the cost and the material which is directly associated with that product is known as direct material. All materials or components specifically purchased, produced, or requisitioned from the stores. Primary packing material will also be coming under the direct. Purchased or partly produced components will also be coming under the direct materials. Means when we are manufacturing any product, the material which is directly associated with, by seeing the thing we can identify that that is a direct material. See, basic raw material: timber in furniture, cloth in garments, gold or silver in jewelry. All these are the basic raw materials, are examples of the direct material. Primary packing materials: bottles for water, wine, can for or tin for drinks, milk, ghee, bag for cement, like that. So the nature, one of the nature of direct material is that it varies directly with the volume of output. Then what about indirect material? Right. The indirect material, all material which is used for the purpose of ancillary to the business and which cannot be conveniently assigned to specific physical unit is known as indirect material. Right. Those materials which cannot be conveniently identified with that, which can't be directly allocated to the particular product or job or process, we can't assign those material directly towards with the product. It may or may not vary directly with the volume of output. Some of the indirect materials may be used in the factory, office, or selling and distribution divisions. Here, stores used for maintaining machines such as lubricant oil or grease, cotton, all will be coming under the indirect materials. Materials of small value will also be coming under the indirect material. Then, direct labor: the labor which takes an active participation or direct participation in the production of particular commodity is called direct labor. So the direct labor costs are therefore specially and conveniently traceable to specific products. Here, direct labor is that which can be readily identified with the specific product or job or process. It varies directly with the volume of output. By seeing the thing, we can identify that yes, it is a direct labor. Weaver in the weaving unit, all factory workers, carpenter in the furniture unit, baker in baking unit, all are the direct labor. Then indirect labor. Now moving on to further indirect labor. See, the labor employed for the purpose of carrying out tasks incidental to the goods or services provided is known as indirect labor. The labor which can't be readily identified with the specific job, contract, or process or work order. It may or may not vary directly with the volume of output. Labor employed in personnel department, payroll, engineering, timekeeping department, all will be coming under the indirect labor. Then direct expenses: the expenses which can be directly, conveniently, and only allocated to specific cost center or cost units is known as a direct expenses. All direct costs other than the direct material and labor costs are termed as direct expenses. Right? It can directly allocate to the particular product, job, or process. It varies directly with the volume of output. Right? So here, the examples: excise duty and royalty based on output, hiring charges of the machine, tools, etc. Then indirect expenses. Here, the indirect expenses which cannot be directly, conveniently, and wholly allocated to the cost centers or cost unit. Indirect costs other than indirect material and indirect labor costs are termed as indirect expenses. So it cannot be directly allocated to the particular product, job, or process, may not vary directly with the volume of output. So example: rent, rates, taxes, repair, insurance, depreciation, etc. So overheads, as I mentioned, indirect material, indirect labor, and indirect expenses all together is known as overheads. And then, see, overheads will be classified a production or manufacturing or factory overheads, again, selling overheads, distribution overheads, and office overheads. First and foremost, production overheads. Here, the production overhead or manufacturing overhead, such indirect expenses which can be incurred in the factory and concern with running of the factory or plant is known as a manufacturing expenses or indirect expenses incurred by the production department. Here, the cost of consumable, salary of the supervisor, power used in the factory, plant and machinery, all will be coming under the production overheads. Then administrative overheads. The expenses are not related to the factory, but they pertain to the management and administration of the business. Aggregate mean total of indirect material cost, indirect labor cost, indirect expenses incurred by the administrative department is known as administrative overheads. Cost of printing, postage of administrative, salary of MD, managing director, rent and rates tax of office building. Then selling and overheads, selling overheads. So again, the total of indirect material, indirect labor, indirect expenses incurred by the sales department. Cost of printing and postage of sales department, salary of sales director, rent rates for sales department, etc. Then distribution. Again, the same way, in similar way, indirect material and indirect labor and indirect expenses incurred by the distribution department, like salary of sales staff distribution department, rent rates, taxes of distribution department. Then the other classification is classification of cost by functions. Production cost, administrative cost, selling cost, distribution, research, development, and pre production cost. First, the production cost is aggregate of direct material cost, direct labor, and direct expenses of factory and production or overheads. So, these are known as the production cost. And administrative, aggregate of direct material, direct labor, and direct expense of administrative department. Selling department. Distribution will be the same, distribution department. And research, the cost of research for new product or post development or innovation of new methods is known as the research cost. Development cost of new product and development of the product, process development or innovation of new methods and its implementation is known as development cost. And a pre-product cost, pilot project cost before commercialization of a product. Then classification of cost by relation of cost center, direct cost of this cost center and indirect cost of the cost center. By behavior, fixed cost, very important points are over here: fixed cost, variable cost, and semi variable cost, and semi fixed cost. So, here, what is the fixed cost? The fixed cost remains constant irrespective of the changing of the output. So, those costs which don't vary with the change in the volume of output is known as the fixed cost. It is the fixed cost per unit decreases as the production increases and vice versa. See, examples of fixed cost: rent, insurance, salary of manager, they are the fixed in nature. So suppose total cost, even if you produce 0 unit, 1,000 rupees, 1 unit, 1,000 rupees, 10 unit, 1,000 rupees, 100,000 rupees, thousand rupees, like rent of the building. Even if you manufacture 0,000 rupees, you have to pay. Similar in nature, but the fixed cost per unit will be changed. The fixed cost per unit will be decreasing if you produce more and more units. That this is the fixed cost line, the total fixed cost line is constant, and the average fixed cost line it is go on decreasing in nature. Then variable cost, varies with the production. Those costs which vary in direct proportion to the volume of the production. The per unit remains constant, direct material, direct labor, and direct expenses. Here, 0, 0. If you produce 10 units, it is a 10 means 100 rupees, 100,000, 10,000. So, per unit cost doesn't change, it remains constant. See, this is the total variable cost line, it is go on increasing, depend on the output. Then semi-variable, partly fixed and partly variable. Telephone, up to this, similar charges, after that it will increase. Electricity, up to this it is like this, after that it is increasing. Like that, the semi-variable or semi-fixed cost both are same. Now, classification of cost by controllability. Some cost we can control all direct cost. Uncontrollable tax manage remuneration all fixed cost. Then classification of cost by normality. Normal cost, the cost which is normally incurred at a given level of output. Cost of material labor as per standard. Abnormal, the cost incurred in the above the normal cost due to abnormal situation will be called as a abnormal cost. Cost of abnormal material losses or profits as well. Abnormal any expenditure will be comes under the abnormal cost. Right. Classification of cost by inventory, production cost and period cost. Cost which are changed to products or services is known as production cost. Period cost, these costs are not charged to the products but written off from revenue of the period is known as the period cost. Classification of cost by time, historical cost, original cost of an asset when it is acquired by the company. It is included in the balance sheet and it will be original cost of the asset. Predetermined cost, future cost ascertained in advance, for example, standard cost or budgeted cost. And the special cost used for the managerial decision making. Relevant, which are relevant in nature, future cost, X dismantle cost of machinery. Irrelevant. They are not relevant in the decision making of the firm. X written down value of old machine is irrelevant cost. Sunk cost, which we can't get it back. Historical past cost, X written down value of old machine is sunk cost. We can't get it back. Shutdown cost at the time of the shutdown of the company. Out of pocket cost, costs involve outlay of the cash. Opportunity cost, next best alternative sacrifice is known as the opportunity cost. Rent of old building proposed to be as used as a new factory is known as the opportunity cost. Differential cost, increase or decrease in total cost due to proportion of less or more outputs is known as differential cost. Marginal cost, additional cost for additional unit is known as the marginal cost. Replacement cost, cost of replacing an asset with a new one of the same kind and functionality at the current market price is known as the replacement cost. Now, the items excluded from the cost accounts, incomes, profit on sale of the fixed assets, sale of investments, profit would be considered. Expenditure, loss on sale of fixed assets and investments won't be considered. Appropriation, income tax, dividend distribution, taxes won't be considered in the cost accounts. Then, now, the major point of discussion over here is cost sheet. The components of the total cost is as per the cost sheet. First, prime cost, direct material, direct labor, and direct expenses. Then, works cost, prime cost plus factory overheads. Opening work in progress we have to add and closing work in progress we need to deduct. Then cost of production, works cost plus administrative overheads. Then cost of goods sold, cost of goods produced, opening stock of finished goods should be added and closing stock of finished goods should be deducted. Cost of sales, that the cost of goods sold plus selling and distribution overheads. Now, the cost sheet is a document which provides for the assembly of the detailed cost for the cost center or cost unit. It shows the prime cost, worst cost, cost of production, cost of goods sold. This is also called statement of cost. The main purpose is to identify, to ascertain the cost per unit and the total cost of production for the output. It reflects backup figures, facilitate comparison over the years, eliminates estimation of the cost of for preparation of tenders and quotations. Management take the decision making for the sale price. It acts as a base for cost control also. Then the performance will be like this. First, direct material we need to do like this, direct labor, direct expenses. Then all will be combined together is known as prime cost. Add factory overheads, works cost, add administrative cost of production, selling and distribution total cost of sales, then add profit, you are going to sales. By dividing by the number of units, you are going to get the sales price. Then some adjustments we need to remember, we need to note it down and we need to focus on these is how, what is the formula for raw material consumed? Opening stock of raw material plus purchases and plus expenses on purchases minus purchase returns and minus closing stock of raw material minus net value of normal scrap, then you are going to get the raw material, direct material consumed. Then second one, work in progress. If work in progress is valued at the prime cost basis, it is adjusted before arriving the prime cost. Add opening work in progress less closing work in progress. You are going to get the prime cost. Even then, work in progress valued at work cost basis. Add cost of opening work in progress. Cost of closing work in progress should be deducted. Add the cost of opening. You are going to get the works cost. If the question does not mention on the base of valuation of work in progress, then it should be valued at the works cost itself. Then stock of finished goods. See, after cost of production, add the opening stock of finished goods and less closing stock of finished goods. You are going to get the cost of goods sold. Then treatment of scrap. When the factory has several productions, the realizable value of the scrap should be deducted from the factory overheads or factory cost in the cost sheet. Then closing stock valuation, cost of goods produced by number of units produced in the closing stock unit. Some cost may be given as a percentage of, other calculate accordingly. Then see, this is the I have given one problem for better understanding. Raw material, keep it in the prime cost. Opening raw material, opening progress works cost, opening finished goods cost of production, we need to opening add and closing deduct. Direct wages, direct expense, 15% of direct wages means 15% of 50,000 is you're going to get something, and we need to put it that in the direct expenses. Purchase of raw material this much. Factor expense 18% of the prime cost. After arriving the prime cost, we need to make it 18%. Administration 22% of the works cost. Sales 7,20,000. So like this, see, direct material, direct wages. So direct material, raw material consumed, direct wages and direct expenses. Factory overheads, works cost, add opening work in progress, less closing work in progress. Administrative and selling overheads, cost of production, add um, opening stock of finished goods less closing stock of finished goods, cost of goods sold and profit. Then you are going to get the cost of sales and profit. We need to add, you are going to get the sales price. So this is the thing. Raw material consumed will be like this: opening plus purchases minus closing stock is value of raw material consumed. 15% of direct wages, that is 50,000, 7,500 is direct expenses. Factory prime cost is 2,33,500, so factory expense 42,030. Administrative will be this much. Then the second one, similar in nature, but machine hours worked, machine hour rate, office on cost, selling on cost, units produced, units sold. So cost per unit identify, raw material, direct price, direct, similar in nature. First prime cost, direct material, direct labor, direct expenses. Then factory hours we need to add, works cost, or then you are going to office overheads, cost of production. Then adding the cost of closing opening stock of finished goods and less closing stock of finished goods, cost of goods sold. After that you need to add selling and distribution cost of sales. These are the things, and the cost sheet for the period and different working notes are also I have given for better understanding purpose. As no information of selling price is given, so profit or loss cannot be ascertained from the question. If your selling price is not informed, then you can't identify the profit or loss, right? So one more thing I would like to make you understand is if 10% of cost, so what you need to do here. So if it is a 10% of cost, you need to identify selling price will be there. So first you need to identify the every time you need to keep cost price as 100. 10% of the cost, that is a 10 rupees. So the selling price will be the 110 rupees. So 9,000 cost price means selling price will be the 9,900. Similarly, so 110 by 100. If cost price is 90 rupees, profit is 10% on selling price will be 100, 9,000 and 10,000 will be the selling price. 100 by 90 into 9,000. If selling price 110, 10% of the cost, so cost price will be the 100. So 11,000 means here 10,000 will be the cost price. In similarly, you need to calculate all the required information. So thank you. Thank you for watching. Thank you for staying with me. Thank you for your support and encouragement. Thank you, one and all.